Thanks for tuning in. Let's talk. Welcome to the third episode. I'm your host, Elena Lau, real estate broker and CEO of Union Real Estate. On today's episode, I will give you a weekly update of the housing market for the greater Boston area. And I have the honor today to have my friend Carmen Chong with us today as our featured guest speaker, who will be sharing with us shortly about the strategies to use life insurance for retirement. So let's dive into the numbers for this past week. For the single family market in the greater Boston area, this past week, there were 149 homes sold with an average days on the market of 39 days and an average sales price of $837,000 and a median sale price of $670,000. If we look at this graphic, we're comparing week by week and also between 2019 and 2020, we can see that the numbers of homes sold has dropped significantly. And then this partly is in view of the shortage of inventory that we already had experienced prior COVID-19. But because of COVID-19, seller has been putting a pause on the sale of their property. In terms of the sale price, we can see that the pricing has been keeping relative the same compared to last year and prior weeks. In terms of the condominium market, there were 113 condos sold with an average day on the market of 48 days, average sale price of $632,000 and a median sale price of $550,000. Looking at the chart, we also see similarly affect like the single family market. The number of sold listings have also significantly minimized, same reason as the single family market. In terms of the prices, we're seeing that is relative flat, so there is not much change. As you can see, there is still opportunity out there for home sellers to take advantage of the current environment. There is a high demand, like I explained on the last episode, because there is a shortage of inventory, which means that there are multiple offer situations, which translate to higher sold prices. And for the buyer, the rates has been historically low, which is giving an opportunity for the buyers to purchase at this point in time. Today, I also want to share with you the latest home design trends. Because of COVID-19, living is not the same, and home design is looking for more practical ways of living. And then with that, what I have been seeing that like the open floor concept plan has been popular, but with this pandemic, people are looking for more defined areas for whether it is for work, living, or study. So what you will see as latest trend will be flexible layout with mobile partitions, as you can see in these graphics, which allows flexibility on how you want to use your living area. Another trend that you will see is that people are looking for more connection to the private outdoor space with your living area in a way to disconnect or to take a breather from your work or your daily life. Another trend that you will see also are the touchless sensing technology. Because of the concerns of the health, you will see more technology emerging that is gonna be touchless, such as toilet, faucets, appliances, and also electrical outlets. We're gonna see more of that. So this is what I got for today. At this moment, I would like to welcome Carmen Chong, President and Broker of CC Legacy Financial. She has extensive experience in business and financial services, serving community of all types. She has also served as the ARIA National Chairwoman in 2015, and currently she is the ARIA Global CEO. Welcome, Carmen.
Thank you, Elena. Thank you so much for having me. It's an honor to be on your program. I think that you are doing such a great job bringing information to your community, right? It's all about, oh, and we don't just do ARIA. I mean, we also have our own business that we had to run. That's why I am actually really honored for you to have me as your third speaker. And it's just amazing how much information that we can give out there to the viewers out there, and they're yearning for having information. So thank you, and great information again on the Boston market, and what you just said about the designs. We have to adapt, right, to new things. So today my topic is why it's basically not why, it's that a lot of us don't think of life insurance as a way of saving money for your retirement tax free. And today my topic will be just that. So it is life insurance as tax-free retirement. Let's go ahead and move on to the next. I just want to let you know that I have been in the business for over 28 years, in the real estate business, in the mortgage business. But it was only until about 5 years ago that I started to look into the life insurance, being a life insurance agent, because by chance I just listened to a webinar, and from that webinar it just created some curiosity from me. Being an entrepreneur, being a self-employed, I needed to know as to whether I was doing the right thing for me to save money for my retirement. I mean, I tell myself I'm not going to ever retire, but here we are. It's a very important subject, and I hope that the information that you will get today will be something for you to think about, and perhaps think of it as a life insurance for your retirement tool. Anyhow, before we go that, most of you know that there's different type of retirement plans out there, which we call qualified retirement plans. And that is for those people who are W-2 employees. They have the 401k, teachers 403b, 457s. And then for the self-employed people, we have the IRA, the SEP, which is also for a specific for self-employed, and the Roth IRA. Most of you know that the Roth IRA, it's after tax dollars that you can save money for self-employed. Anyhow, most of these products that you see here, except for the Roth IRA, are plans that has been promoted out there so much, very popular. You must save money. Some of the companies will even match your savings if you were to do that with the 401k. But the one great thing that it does is that it defers taxes, meaning that you don't have to pay taxes today. You don't have to pay that 33% of taxes that you have to pay today. So that's why you defer that until later. But most of us, and quite frankly, Ellen, I find that people think that they don't have to pay taxes when they start taking it out once they retire at the age of 62 or 65, depending whatever age. But then there's also limitations for you that you have to take it out. Most of us think that later on when we retired, we're gonna be in a lower tax bracket, so we're gonna pay less taxes. But let me tell you, that's not the case. Most of the time, or it is said that our tax brackets may go up even to 30 to 50%. So that's just for those of you who know that you want to save money, tax free, not tax free. That is only for the Roth IRA, but for the other ones, that is what we have as a tool to save money um, for retirement. So let's move on to something that I came out with that I did not know. And I think that for most of you, you have to think of life insurance as a financial tool, as an essential financial tool for you to be able to save your money tax free. It is not just for what we do, which is if somebody passes away, and then you're going to be able to receive that benefit. It is much, much more than that. And before I get into that, as to the strategies as to how you can save money tax-free using life insurance, I want to go over with the basic things of life insurance, right? So most of us know term life and permanent. And then, so for term life, it's just like, Elena, it's just like when you are renting, right? You don't own it. You're just renting for a certain period of time. So on term life insurance, it's just that it's for a number of years that you want to have your insurance policy effective. So we do have the 10 year, the 15 years, the 20 and the 30 years. It's the most inexpensive way of you buying insurance out there when you don't have enough for you to pay, right? And it is just going to be like a supplemental of your income in case something happens to you, and you're going to leave it to your family. So that's what term life is. Permanent. Mhm. Yes.
Permanent.
Hmm?
Can you like I know that you're gonna get into it, but like I may be going ahead, but in comparison of the term and the permanent, I think like you mentioned that it can be also be cash out. Like, can you explain that as well?
Yes, yes, definitely. So that then, so the term, there's no cash value. It's just a life insurance policy that will pay you out if something happens to you. But for most of you who might not know, there's different type of term life insurance. There's just term life that it will be just that. It will be the least expensive, the most inexpensive insurance that you can buy, which is just when you pass away, you will get it. There's nothing else. But there's other companies that came out with what we call a living benefit. So when you get sick, you're going to be able to access that benefit for you to use today, because you need to replenish your income, right? So when you're sick, you cannot work, or when or you want to get second opinions with your doctor. So where are you going to get the money to help you pay for that besides your health insurance? Your health insurance only pays for you to go to the doctors, for you to get your for hospital or for medicine and things like that. But there's other type of term life out there that gives you a lot more benefits. And we can talk about that later on. Today is about retirement. So when you ask, how can you get cash out? So just like refinancing cash out, right? So permanent life insurance is basically where it allows you to save money in addition to having protection of your assets. So what you do is that as soon as you start accumulating your cash and it's starting to earn interest, and this is the beauty of it, when you earn interest, it's not a simple interest, it's compound interest. And there's different type of permanent life insurance. Most of you know about whole life, right? The whole life is, it guarantees your premium, it guarantees your death benefit, but you don't know where they're investing your money in, and it is considered to be one of the most expensive type of life insurance. And then there's universal life. There's three type of universal life, which is fixed, which is a more conservative. It will give you just a fixed rate. Usually it's between 2 to 4%. There's the variable. That's where you, for those of you who really like to play the market, but I wouldn't do that because, again, I'm using this life insurance as a retirement financial tool. And I don't want to be, your financial advisors always tells you to be conservative as you get older, because you don't have that years of recuperating or recovering if in case the market goes down. So that's the variable, not so popular, but there are some people that like to do that because they like to be aggressive. The one that I like the most is the next one, which is the Index Universal Life. Why do I like that one? It's because, number one, it helps me protect my assets. Number two, it helps me accumulate cash value by saving money. And then it doesn't play with the money that I'm saving. The money is protected. It is tied to an index, to various indexes. One of the most popular one is the S&P 500. If you want to follow that, that's great. But on all this, on the permanent life insurance, especially for the Index Universal Life, the beauty of it is that if in case, especially nowadays, the market is so volatile, if in case the market goes down, the interest rate that I will get is not a minus, it's 0%. So I will not earn anything on my cash value, but it will be 0%. And then I will have the advantage of earning an average of 6 to 8%. Some of the companies, life insurance company, have a life cap was 10%, 13%, some even 15%. Yes, it's true. It might not give you the 23 or 30% that you make when you have your own stock portfolio, but this is a better way for you to have a steady income coming in, and then for you to be able to access when you're retired. When you say cash out, Elena, basically you're able to borrow against your cash that you have accumulated, right? So when you borrow against that, you're not going to pay any taxes on the money that you receive because it is as a loan, and you don't have to pay it back either, like the 401k when you have. So this is something that is very important that I want you to know. On a 401k, when you do a loan against that, right, they say it's good that you can do that because then you pay yourself your interest, okay? But when you take the money out, you have lost that percentage of interest that you could have earned if you didn't borrow that money.
Yeah.
Unlike the life insurance, and this is something that one of the many things that make me change my whole portfolio for my retirement is that on the insurance, if I have a necessity to get some money out because I wanted to buy a property or I wanted to travel even more, right? I wanted to do a travel all around the world, or I want to help my kids to pay college, which is definitely that's what I'm doing. And I don't want to touch my own assets. Then you can borrow against the cash accumulated value that you have already tied into your insurance policy.
And you are saying that when you cash out, you are not paying any interest on that?
Oh, yeah. When you borrow, right? So when you borrow, yes, there is a percentage of interest rate that you had to pay, but it's usually less than the interest that you will get from saving the money in your life insurance. So for example, right now it's a 4%. Different company has different percentage of rate that when you borrow the cash value from your policy. But then the average of interest that you get for mostly on the index universal life in the past 15, 20 years, it's about between 6 to 8%, right? There have been years that perhaps then the market has gone under, like I was saying, negative. You don't have to worry about it. And that's the beauty of it. You don't have to worry about it because you don't lose any savings that you have already put into your life insurance policy. And the one thing which I haven't mentioned yet is when you take that money out, let's say that you have accumulated 400,000, right? And then you just want to borrow 100,000.
Mm-hmm.
Under the Index Universal Life, you will continue to earn interest on your full $400,000 principal that you still have in your life insurance, right? Even though you borrowed it.
Wow.
So exactly. Versus in the 401k, you just earn interest on the remaining balance or principal that you have. It's when it comes down to numbers, it's a huge difference, right? But just by knowing that you can still earn interest on the full principal amount, even though you borrow against it, it is well worth it for you to then start saving your money with the life insurance as a strategy.
Okay. Another question that I have, you mentioned that we can cash out for any type of emergency or situation. And you also mentioned about living benefit. Are these two tied up? And if so, like, can you give us more information about the living benefits?
Yes. So living benefit is totally different, right? Living benefit is basically a rider that one of the products that I represent from the company has. Many companies will have living benefits, but most of the other companies is partial living benefits. In this case, the one that I would promote is the one that with National Life Group. And what the living benefit does is that it will accelerate your death benefit. So you're not touching your cash accumulated value that you have in your life insurance. You are accelerating let's say that you have $1 million. You got a heart attack, stroke, cancer, whatnot. And you need to then, so you can accelerate your $1 million for you to be able to use today.
Okay.
I don't recommend for you to use the whole thing, just a portion, whatever you need. But in Massachusetts, because you guys have a really, really good medical and health insurance, right? There are some limitation on how you can use that money that you take out. Other than Massachusetts, everybody else, California, for example, New York, everybody else are going to be able to use this money that they will receive if they get sick and use it for whatever they want, to help them pay for the mortgage, to help them pay for college or expenses or whatever you want to use it for, even to go travel. You can use it for that when you're sick because you want to enjoy life a little bit better, right? Knowing that something happened to you, or maybe because you want to distribute all your money now when you're still alive. So, but Massachusetts, there's limitations on that.
So is COVID-19 also part of those critical illness?
Yes.
Okay.
So it doesn't matter what type of illness it is, but if it is considered to be a critical illness, which COVID-19 will, for some have been terminal. So there's the terminal illness, there's the critical illness, and there's chronic illness. There's three different type of illnesses that it's being categorized for us in the living benefits. So COVID-19 is in fact one of the ones that we'll consider as a critical illness.
Okay. So we have about a few minutes. Do you want to go over to the next strategies, ways on using the life insurance?
Yes, definitely. So we talked about, at least now you know the different type of basic life insurance. So something that I would like for you to really think as being part of an essential tool for you to use it for securing your retirement, right? So the very first one, the reason why you could use it as to protect your income. Because if something happens to one of you in the couple, right, you're going to be missing that retirement or that income. So definitely using that to replenish your income is one of the ways for you to make sure that you still continue to have that retirement that you were planning as a couple or as a single, right? And you have something like that your family won't have to worry about having that mortgage that they need to pay, having the other expenses, or having maybe taxes that they have to pay for when they receive the house. Like for my daughters, they're gonna get my house. And they had to pay taxes on it, right? Because it's going to be like a gift. But there's other ways to know how to do it so that they don't get affected by taxes. So protect your income. Number two, keep your retirement savings on track. In a sense, we're always catching up, right? Trying to save money. We're working hard, trying to save money to put aside, but we don't do it. We do not do it. And so can you imagine that if one of you are missing, then your savings is not in track. And definitely that's something that you don't want to be missing if you are able to have, and you don't necessarily need to maybe save the money or get a permanent life insurance, but at least get yourself a term life for now. And at least it will be able to help you offset that income that you're not going to get if something happens to you. Number three, improve your investment asset allocations and return. That's just basically nowadays, you know, that we're in the low time interest rate, right? So most of the baby boomers right now, or even you yourself being young millennials, you don't want to invest your money in CDs or savings because paying less than 1%. So life insurance is also another strategy for you to be able to use, because you in the history you will earn interest rates that are between 6 to 8%. You will lose 0% if the market goes down, but you can also get up to a cap of 10 and a half, 11, 12, 13%, depending on which company you use. And finally, manage your taxes. What I mean by manage your taxes is this, that whenever we always think that in the retirement, we're going to pay less taxes because we make less income. It's actually the total opposite, because we're so good about also saving money for our retirement that actually we have too much money for us to, and then we have to pay for that 401k taxes, right? The 33% that you thought that you don't have to pay, you have to pay it. Somehow you have to pay it. So what can you do? You don't want to touch your own liquid assets. You can then use the life insurance again to help you pay for your taxes. Maybe it is for state taxes because you have properties, right? You just had a session about that, about state taxes, about planning your will. Definitely, that's also another essential thing that you must do to prepare yourself for when there's so many unknowns that can happen to us. So again, think of life insurance not as just to protect your assets. I shouldn't say to protect your, just to give it to your beneficiaries, right? Think of life insurance as a financial tool for your retirement. It is now being viewed as the most essential part of securing your retirement.
Right. Well, especially nowadays that we're living through this pandemic, I think it has prompted many people, including myself, to think about like protecting not only my family but also myself.
Yeah.
Like you mentioned, last episode, we talked about estate planning, but this time you are bringing us information about how to utilize this life insurance preparing for our retirement. So these are great information. I'm sure it's a lot.
There's
Um,
a lot more, Elena. I mean, and then let me tell you, you guys, we are the biggest assets and we don't insure ourselves. So that's why 5 years ago, when I learned about what life insurance can do for you, I changed the whole aspect of it. And if you guys have any questions, definitely, call me or email me. I will be more than happy to give information. You can go back to those of you who already have life insurance, go back and look at it and see what you have, because what you have, you could do what we do when we refinance to get a lower rate, just like when Martin talked about that. Well, on life insurance, you can upgrade your life insurance as well.
Thank you. So I believe there has been some commentary coming from Facebook.
Oh,
So we have Martin commenting, great information, Carmen. Thank you very much. He has a question. What other benefits does the index universal life insurance have? Does it also have living benefit? I think we already touched upon that. I don't know if you want to add something else.
well, basically, the life insurance that I promote has living benefit, whether it is term life, whether it is whole life, or whether it is index universal life. The company that I represent has that. And then and definitely I want you to go back and look at the ones that you have and see, are they going to pay you when you become sick?
Mm-hmm.
That's very important. Nowadays, we're becoming more sick. Yeah, well, I shouldn't say that. If in case something happens where you are sick and you want to be able, and you don't have enough savings, you want to be able to have something that can help you, right? So think of that life insurance for you. It doesn't have to be with the cash accumulated value type that you can save money, but it could be just a term life, which will pay you even though you are sick. You don't have to wait until you pass away in order for you. So you got to be a little bit more selfish, right? In a sense, right? You want to have something that you can use while you're still alive. Elena, I cannot hear you.
Oh, can you hear me now?
Yes.
So for Jacqueline Goose mentioned that she loved the information, and she's also asking, like, what do you recommend when she's starting to like, let's say, in investing through life insurance?
What to do?
Like, what will be the first step, or what type of life insurance you would recommend for her?
Well, Jennifer, thank you so much. I know that you've been watching also our Global Q&A live, and appreciate that from you. Anyhow, so what you should do to if you don't have any life insurance, I think that you need to start self-studying as to what it is that you need, or how much money you need to have. Just treat it as the same thing as you would treat it as looking as saving for your retirement. For the index universal life, what I would do is I will look at all your assets, I will look at all your liabilities, and I'll look at as to how much money you want to receive, because that's the other thing that we didn't talk about. For a lot of us who are self-employed, we don't have a way of saving money except for the IRA, right? And then the SEP IRA, which also limits us on how much we want to save. For those of us who are making, especially we're very seasonal in earning money, we want to put the most amount possible out there in order for us to have a good retirement plan for us. So by the time that we get to the age of 65, 7, or whenever you want to, because there's no restriction like the 401k or IRS that tells you that you need to take the money out. You can take it out whenever you want to. You can ask your life insurance company to send you monthly payments like a pension. And or you will also have what we call in this company is the lifetime income guarantee, that you will receive income every single year or every single month, whichever way you want it, all the way up to 120 years old. So that's also very important, that I think that you should also think why life insurance is that most of us may have $1 million saved already, right, for retirement. But we are really looking at a lot of baby boomers that are outliving their savings. meaning that that $1 million may only be able to pay you for the next 10, 20 years. But what about after that? That's why you see a lot of the older people coming back to work, because they don't have income to continue to, you know, to live. And life insurance, one of those things, one of those solutions for you that you don't have to worry about. Start when you're young, because it is based on the cost of insurance being low, right? When you're younger, and you're older, it costs more. So everybody out there, you don't have one, you better get one. So that's all.
Oh, thank you so much, Carmen. I think there's so much information that we know. So I hope to invite you again for another episode. So maybe we can delve into more details on the different type of life insurance.
Most definitely. Thank you, Elena.
Thank you. So for the audience out there, if you have any more questions, my contact information is down below. So feel free to contact me. And if there's any question related to life insurance, I will direct it to Carmen.
Thank you, Elena. Thanks, everybody.
So for our next episode, for next Wednesday, we will have Dr. Liliana Gomez Infante, who will be speaking with us something different that is unrelated to real estate, but it's all about how she in her practice has been dealing with the dentistry environment during COVID-19. So that will be an interesting conversation. So with that, I just want to say thank you again to you, Carmen, to our audience. Thank you so much. So see you next time.
Bye-bye.
Bye.